Hey guys, and welcome. We're going to be breaking down SPY. So you kind of got a little bit of a preview of what I'm looking at. So if you are a technical analyst, you probably already have an idea of what I'm thinking. But we're going to take this from the beginning. We're going to break SPY all the way down. So you can see here from October of last year. Is that right? Yeah, October of last year, we've been on this incredible run. I mean, from 411 to 482, we've had a huge, massive 70-point move. But let's break this down into smaller moves. So we had this markup over here, and I'm just choosing this point because obviously, we're going to try to keep this short and sweet. We had this markup over here from 410, let's call it 410 to 430, let's call it 430. And then we had this bull flag right here, consolidation, and then we moved up. Now, take a note at this pattern. You can see here we ranged within the pattern. We had a false move down, and then we continued up. All right, so then we had another markup, right? And then we had another consolidation right up here, and then we moved up. So you can see again consolidation inside of the structure, and I'm just kind of freestyling, so I hope this is clear for you guys. Let me adjust this a little bit so you can see just a little bit up here. Okay, move this up a little bit. All right, you can see we had another consolidation in this range. We break down and we continue up, so you can see this is one. Okay, two. Let's check this out again. We had another markup over here, right? And then we have another much wider consolidation range. Same effective pattern though. Bull flags after bull flags after bull flags, right? Let's adjust this a bit. Boom. We broke down, false to the downside, and then we ranged again, and then moved up. So you might be curious, like, well, why do we keep breaking down towards the downside before we make its intended move? The intention of that is to trap retail and trap investors the wrong direction to make the intended direction a much more profitable move. And unfortunately, that's how the market often tends to operate. In this case, we've seen it three times. False move towards the downside, continue up. False move towards the downside, continue up. False move towards the downside, continue up. So the good thing is, on the bright side, is that we have very likely the true and intended move ahead of us. So now we can look for bullish opportunities. What I do like about this breakout is that it is a big, strong engulfing bar. It's very little wick or shadow towards the upside, and is made this move with strong volume, strong momentum. And again, if we got into volume, momentum, and all different types of aspects that all deserve their fair time and attention, this video will be much longer. But we will have longer term videos to break all of that down. So again, like, subscribe, comment in the section. I want to hear what you guys have to say, what you guys think, what you guys want to see. Tell me the names that you are interested in so we can break it down and have these discussions. I think is helpful. So this right here is an honest and true breakout. So what's next? Well, if we're talking options, then the most ideal thing in my view for an option strategy is to wait for some type of correction or consolidation before we continue higher. Often when you do get these good breakouts, you'll get a little bit of consolidation or a deep retracement before we break higher. So why did I mention consolidation or retracement? Because a correction could be in two things or both. It could be in time. So if the market, just for example, let's say it didn't come down, it just went sideways, right? That would be considered a correction. So that's time. Or if it just came down back into the zone. That's distance. So you're operating from both axes. It could be time or distance for a correction to be valid. So with that being said, ideally, I would like to see a correction towards the downside of 477, 475. But again, it doesn't have to. It can kind of just stay sideways and then continue up. So there's things that we look for to help determine which one of those two are occurring and then how to trade either outcome. And again, we'll get more into that as far as how to actionably take these trades in another video. So check out the videos. Check out the videos. So we believe that we're bullish. Check. We believe that we have a bullish structure. Check. We believe that we're going up. Check. And we also believe that we're going to get some type of consolidation. Where are we going to? I believe that the next target for SPY is 500. That's where our next target is going to be. What I also like about SPY that I did not mention is that we have this structure here. Let me grab my tools. We have this potential inverted head and shoulder, which would add duality to this structure. So now we have two patterns instead of one to suggest that we're bullish. So an inverted head and shoulder is a bullish pattern. A bull flag is a bullish continuation pattern. So both of those patterns are saying higher, and we're saying higher with, again, strong volume, strong momentum, great conviction. So that's where we're headed to next on SPY. So that's my SPY breakdown. If I missed anything, let me know. Whatever you want to see, tickers, whatever, let me know. And then I'm going to, when I say tickers, I mean name of stocks, name of companies. It could be any commodities. We'll talk about crypto, Bitcoin, all that good stuff. So whatever you want to talk about, we'll show that, and we'll keep these videos up so we can see how we're doing and how the market continues to play out based on our analysis. So if anything changes, I'll do my best to update the videos in real time so you guys can kind of see what we're doing. So again, my name is Yusuf, coming from the Contrarian Daily. Like, subscribe, comment. Let me know what you have to say and think, and tell me what you want to see. Tell me what you're doing, and we'll try to grow together.